All right, we're gonna do the third video for today. So this is gonna be the last one, and yeah, it's called Royal Gold Incorporated. It's on the Nasdaq here, and it's priced about $90. Just quickly looking at some of the technicals here. That's what this thing says. Market cap is 5.8 billion, so looks like we have a decent amount of money that this company is worth. And just to take a quick look at what this is, I actually looked at this a little bit beforehand, not just completely jumping in naked like I usually do. This is actually not quite just pure precious metals. It's not quite pure mining, but it's actually something a little bit different. So it operates through the following segments: acquisition and management of stream interests, and the acquisition and management of royalty interests. So what is stream interests? What are royalty interests? I know that I've looked at the stream interests, and that's where I'll just take a look. I mean, looking down here, you can always pull up the latest news articles, and we'll take a little bit of a look on that. Let's just see here. That's not that one. That's not that one here. This is a summary from another thing. Here we go. What is gold streaming? So how is it different from mining? A mining company, so my gold mining company finds a place in my backyard where I think there's gold. I need to build a mine, dig the gold up, and sell it. There's obviously a more complicated process that goes on. And more or less, what can happen, since there's a lot of mining costs, salary expenses, and it doesn't necessarily work hand in hand with the amount of gold that they're selling, they have streaming companies that basically give them loans, so to speak. It's a little bit of a different type of loan, and it's a loan to basically promise the streaming company gold at a discounted price in the future. So they give them cash to help the miners run their business, and it's an agreement between the miner and the streaming company. It can be reached at any point, and once that's it, it's a way that basically lenders and gold mining companies work together. So streaming in itself isn't unique. Gold and gas, oil and gas, I've used it since the 1980s, and even Canadian, there's looking to be streaming models in agriculture markets. So wherever there's like a little bit of a gap between the end product and there's a lot of costs involved, it looks like streaming companies are coming in. You basically, I mean, I'm starting to look at the streaming model as little banks that are trying to get interest. So I mean, for investing into these companies, I guess there is some benefits, as you can say that anytime that you're loaning out money to someone and expecting a return in an investment, I mean, that's usually results in profits. So the risk of the business model. You can say the best way to think about gold streamers is a financial company that gets paid in gold. So instead of you paying dollars for your mortgages, it's kind of like mortgages that are paid off in gold, in a way. And I just kind of realized that Wheaton Precious Metals, another company that we've covered, is actually a streaming company. So maybe there's a little bit of confusion there previously to think that it was completely a mining company. So I think this is a good distinction, and I wasn't aware of it before I took a look at some of this. And yeah, it's a little bit of a different way to expose yourself to the gold and precious metal market. I mean, it's not completely mining. It's not completely just physical gold or silver, but it's almost like interest on gold and silver, in the mining companies in particular. It's a different type of asset that I wasn't aware of. So considering that, that's what this means. The streaming interest and the royalty interest. I think that this is, let's just take a couple more looks here. This is included in a lot of hedge funds. This is a different debate to be had. I mean, they're basically saying that they're basing some stuff about hedge funds, and I don't know. I won't say too much about that. If you want to look at those articles, they're in the links in here. in the news. So that's where I've got this. So updates on Mount Milligan, mines production and reserves. So it kind of gives you an idea looking at this. Let's say, for an example, that so they got up the price about $704 per ounce. It's basically they lock in a specific price of gold so that they'll always pay that from them. Let's see here. I thought I seen a different number. This is a little bit more pertaining. Okay, Royal Gold has the right to purchase 35% of Mount Milligan's payable gold for cash price of $435 per ounce, or at the spot price at the time of delivery, whichever is less. Or the spot price at the time of delivery, whichever is less. So they're never going to buy it for, you know, more than this. Gold is probably not going to be that price. So when you look at gold right here, 1,600 an ounce. So they're locking in prices for this by giving them cash right now to help the mining companies keep going. So it's an interesting kind of relationship between lender and investor. It also has purchased the rights of different minerals too, so it's not exclusively gold. And looks like it's got a lot of liquidity too. I know this company also has a dividend, so that's where I actually seen right here. There's actually a cutoff. They're going to be paying off a dividend right away, so you need to have it before tomorrow to receive the dividend. It's going to be about 28 cents a share, so it's not that much. I mean, considering the stock price is, let's say, $90, I think. So every $90, you'll give 30 cents just in payback right there. You can see different things about dividends and the history here. But yeah, sometimes dividend paying stocks are something to add to the portfolio. I'm just going to exit out of this too. I'm not really sure with this. I've seen this. This was like kind of look at what may be happening. So it became profitable this year, apparently. It won't let me look at some of this stuff. Get out of here. And pays a reliable dividend to this, 1.28%. So this, I don't know, this kind of snowflake analysis, whatever this is. So it's got a dividend. It's got a good past history. It's got a good relative health right now. But the future, it kind of doesn't have a good projection. I'm not sure why. It says right here, forecast is to decline by an average of 5% a year for the next 3 years. So I'm not sure exactly when it comes to like when they give the lending, what kind of where do they have all this cash that they're lending to the gold mining companies for a specific contract? Are they taking out this loan themselves and they have interest to be paid? So that's just where it can get a little bit muddied when you know that you're not really sure about the entirety of this. But hey, it's interesting, and I learned some new things just trying to look at this, and I'm not going to act like I know much about this entirely, but just some other stuff that shows some different exposure here. This is saying this. We got the market cap right here. Oh, yeah. All right, so let's just look at the chart like we're typically, supposedly, you know, that's what we're here to do. So this company is a old standard. I mean, 1982. I mean, this is an older stock than most. And wow, looked like it had quite the decline here. I mean, nobody can just ignore this on here. So it can get kind of tough to see a decline of 99.8%. I mean, jeebers. So imagine if you bought this sucker at 3 cents, eh? I mean, you'd have been one rich man buying this for 3 cents, eh? You know, so looking at this, I mean, crazy. Like, look at that. That's 400x. That's parabolic for us, boys and girls. Yeah, that's pretty intense. But who bought here? You know, I mean, probably next to no one after you've seen a 99.8% drop in an asset. You probably thought that this was going to go belly up, but looks like we had, I guess you could say the price action kind of said no. Look at, we had this bar here, bar, created the bottom, came up. We won't see 3 cents here again unless this company goes belly up. So followed by the bull run here, and looks like we didn't even quite reach all-time highs right there. Looks like it got a little bit too much pump too quick and couldn't beat the all-time highs. And looks like this was a little bit of craziness here. I mean, this whole market cycle, it's just a mess, you know. I mean, looking at this kind of cup right here, I mean, it's never going to be perfect, but that's what I would like to kind of visualize for people, to see that things usually work in these phases of expansion and contraction, for lack of a better way to say. And once we reach that new high, I mean, we had a little bit of a good move up here. Now looking at this, where are we in this sense? Well, this point right here really kind of muddies the data. I mean, 3 cents to 100. I mean, this trend line is not going to have a lot of weight to it. Just going to draw something a little bit more modest then, because this is going to be a little bit more realistic to the current trend we're in right here. That's a decent little supportive trend line. And I just realized that I'm just going to change this to white, because it's going to be a little bit clearer for you guys to look at. And I'm going to keep it nice and small though. So there we got a nice little trend line support. So over the last 20 years, it's been pretty good. Should we expect something like this to happen? I'm not really sure what this was all about, to be honest. I mean, I'd have to look at this company's history and say what happened between 83 and 93. Like, what the heck happened here? I mean, something didn't go right, you know? Did they borrow too much money? Then the gold companies that they lended to went belly up and they didn't get paid, and then they had a huge collapse. Did they someone eventually decided to lend them more money and they actually had some success in the market? I mean, I can't say this. That's all this, you know, storytelling with no facts to base it off of. But looking here, this is typically the gold market rush right here up to 2012. We had a pretty good bull run from 2002 to 2012. I mean, here, percentage-wise, I mean, that doesn't look visually too high, but yeah, that's 4,000%. So that's still a lot. Yeah, that is a lot. I'm just kind of see prices go from $2 to $100. I guess. Okay, yeah, that's a lot of gain there. We're looking at 40 times your money there. So yeah, so that's a lot more than what it looks like when you just kind of look at it zoomed out. But that's why it's good to take a look at these things in those kind of aspects. We'll just pull up an indicator. It looks like I must have deleted it at the end of my last video there by accident, just deleting stuff. So throw in that estimated moving average, threw the 9 on there. Like I said, you can put any number in here. On the monthly, sometimes I like just seeing if it's following to any specific time frame. So I like to look sometimes at the 13, and sometimes I might pop up the 55 on the monthly and see what that's looking like. And looks like it hugged it not too bad. I'm even going to go one step further. It's just because it's such a long-standing company, there's going to be the information to look at this and just seeing if there's a lot of respect being paid to any particular time frame moving average. So I don't usually look at the 200, but especially not on a monthly. I look at the 200 a lot, but not on a monthly. So Anyway, yeah, we have a general positive trending asset here. We had quite the big pullback, but a lot of it has been regained. So from the tops, we did go down 56%, and we've retained, well, now we're down only 34%. So we've recovered about 22% of what we've lost. And on this monthly standpoint, you can say that, yeah, we're kind of hovering around this level where it has touched it quite a bit. It bounces off of it. Historically, not too bad. It looks like it respects this line a little bit. I mean, I'm fine with this line being around here. And like I mentioned before, sometimes you could think like this is the average price of the last 55 months for this asset. It's about 86.76. So in that sense, yeah. Looking at some of these fundamentals here, though, we can see that we are at the top-ish. We've had 1, 2, 3 months to the downside, and you can see that's quite a little bit of a turn down. We've had pullbacks just to be brought back up here, and never say never, I guess, but in a probability standpoint, there's always more room to go down when you're at the top. We've had a pretty clear, let's just say, cross here on the MACD. So right about February 2020, it was kind of saying, hey, we had a pretty good cross here. Look at this one too, are pretty well defined. So this one seeming to have some pretty clear crosses, and I'm not sure how well these correlated. I'm just going to look up here because I'm doing this open naked. So right down here, we could say, hey, we have a tick up. We have a cross right here on the momentum, just one later. So we have one bar that's starting to give us an idea. I guess you could have entered anywhere in this month from here to here. So that's a pretty big range from 56 to about $70 almost. So there's a pretty big range here, and that we waited for the next one. We got that confirmation it was ticking over, and now it's even a bigger range. You could have bought it 72 all the way here, and it even went down a little bit. So that could have got you a little bit fearful, but only to bounce back up and retain some of that. Let's see what else we got here. Right here, it kind of gives us a sell signal. We start rolling off. So the thing is, yeah, you can see where you might not have made much money if you just use these monthly indicators. There's this too big of a range during this time frame. Right here would have given us a little bit of a buy signal. So you can see the MACD on the monthly is quite lagging, to be honest. Unless you can see it in like depending on the time frame, like right here, like sometimes like right in here, there can be a little bit more clear. There can be a little bit more clarity with these crossing over, and it doesn't really look like that was the case. It was just so long and drawn out. There wasn't any good there wasn't, yeah, it's more of a lagging indicator here. Like anyone can look in hindsight and say, oh, look, you know, I mean, so I don't know if these crossovers are going to be giving you an edge in getting in early and predicting the change in flow. But regardless, I think that all the same, you can look at these bottoms, and you can see there's definitely a correlation to the tops and the bottoms. So you could say, like, you could definitely say the sell points are all typically at the top. Yeah, let's zoom this in a little bit and get a little bit better of an idea if these indicators work, let's say, on this weekly sense. So just look back historically here. We could say on a weekly standpoint, here's a pretty good little indicator right there. We would have got in and there would have been a nice little gain. That's a good indicator right here. I mean, the thing is, it was a long drawn out process, bear cycle here. So we knew that, hey, there's a lot of room to potentially gain if this is actually a good asset. And it looks like there was quite the run up, and proceeded to give you 2.5 times your money entering in at a place like this. especially considering that, hey, this is a long-term upward trend. I mean, well, now you can see where you can sound like a genius sometimes and say, well, why didn't you just buy at the bottom here? We had another big long-term trend down, and you bought in right here. It looked like a pretty good idea. It had some upkick, and it just kind of failed. You know, it failed to continue up and go higher, and it looked like right here, like, well, you can almost say right here, that was pretty high. I'd have been pretty scared right there, so I might have been out of the market right there, and then we would have went down and then started ticking up. It's tough to ride every one of these, but that's why you don't use it exclusively. Otherwise, you're buying and selling every couple weeks, and sometimes you're not doing as good as you could be. Regardless, we can compare this little downward cycle to this little downward cycle, and we could see that, well, when we're at the bottom, there is more opportunity to go up, and it's better to enter in at these positions if you're going to be buying these stocks regardless versus at the top right here. So, you know, we all want to buy when things are going up and we all want to sell when things are going down. But to try to make better entry points, let's say when this ticked up here, I mean, how are you going to know if it's just going to continue on this kind of trend, right? It was within a pretty good channel right there. So that's where this all kind of comes into play. So you can you know, formulate a couple different things to say, hey, well, how tight do I want to be riding any given channel here? I mean, how tight am I gonna ride? You know, any channel that we could start forming, and I mean, channels aren't just you know, to the upside. They're everywhere, right? I mean, so that one's not serious, guys. But yeah, these channels, I mean, sometimes you ride it until you don't, right? So when you're looking at something like this, and it has a clear break, let's say, of the channel, I don't think you should really expect it to come all the way back up into the channel all the time. Sometimes it starts forming its new channel, and there's no black and white way to save yourself every time. There's only trends and history, and that's where we can just look at this data and see if there's any type of consistency between, let's say, some of these indicators and some of the abilities to make these trading strategies. So on a week-to-week sense, we could say right here, we had a good signal to say, hey man, we were up high. We might be coming down, and we've already went down quite a bit. We're in the negative now, negative 7.5. We haven't been this low since basically right below 2012. So we had a pretty big slow in production, maybe, or see how fast people start mining, right? But yeah, that's pretty choppy right there. It's not very smooth and consistent. I mean, you like these to be nice little waves, momentum up and down, and when it gets all like this, it's like, who knows what's going to happen? Who knows what's happening in here? Let's just take a look at the 200-day weekly, because sometimes that's a okay really long-term kind of trend. So here we could see, yeah, we got support right here, and then we finally broke through it, and now this might serve as resistance, but where are we right now? We're already above it again. So now I would say that about 89.15 might be what would be considered the average fair price for this over the last 200 weeks. That's what you could say. But it doesn't mean that that's what the price you're going to get in the next 200 weeks. It's only an average. It's just an average. So let's zoom in this a little bit more. See what we can see here. So yeah, on this daily sense, we can just say some things out loud. We can say, hey, we got a roof at about 139, probably about 139. up until then, we were having a series of basically higher lows, and now we made, well, it's always in relativity, right? We can say that we just made a higher low right here too. What are some support that we have here based on price action? Let me see. I have to zoom in some of this stuff a little bit more. Well, obviously this bar right here is probably going to be the major one from the relative last low in history. So right about here, we're going to have some decent resistance, about $61, $60. I guess historically too, you can just say, okay, what's the price action that's actually worked through here? So you could say right here, it kind of acted as resistance. It was supported right here. It kind of had a little bit of support there. It fell through. It kind of got batted down there. You can kind of see how this is a line that has some people defending it for sure. Now, we might be able to say some range like this too. Historically, is it's kind of respected right here. It's been respected right there. Got respected right here. A little bit of a touch there. We've had some price action in here. A little bit of a range, but I would be fine with saying that this 83.18 is a decent level of support. And you can just keep on going, I guess. I mean, you could say that is a support level, but hey, we're above now. We're above, right? So that's not going to be applicable right now. Just in a shorter time frame, we'll have to just admit, right? I mean, we're going to be trending downward. We're going to be trending downward for now until we break out of this trend line, like so. And I guess I could just extend this to create our channel. So we could have some symmetric price action come through here. Maybe we kind of have this as a medium, but what's my perspective on this thing? I mean, it's an interesting asset. I mean, it's a long-standing one. It's kind of had an interesting history with that down play there. I might want to look into that a little bit more. This is included in a lot of hedge funds. I mean, the volume looks pretty intense. A lot of volume here. You had a pretty big sell candle, but you know, sometimes these big sell candles out of nowhere kind of start a little bit of that sell off. Same thing right here. We had a big red candle, first one in a while, and we kind of had a sell off. Depending on where those big red candles are, like if you could see one in here, maybe it'd be a good thing to say that there's a bottom being established. Right here, like I'm not sure why that candle is so huge right here, why they dump so much. Well, it was kind of in that 2001, 2, 3 maybe bubble. We need to see if any of these Fibonacci's make a. Oh, jeez, it's wild, man. We don't want that. Let's just see what this is gonna do. And this Fibonacci retracement is just it's basically just a measure of 1 to 1 and how much. So 23% off of that entire move would be here, 38.2 right here, 50% of this move is right there, and then a 61.8 retracement is going to be right around this level, about that 68. And let's say that this is actually the top of a 5-wave structure. Sometimes we could predict that that ABC retracement is going to be within that range. So if we're going to just say that, hey, this was 1, 2, I'm not sure if that's going to be applicable to the rules right here, because that should realistically be wave 3 can never be the shortest. So there looks like there's kind of a battle there. Possibly what actually is happening is that this might be the case here. Maybe that's more what's happening. I can't be certain, but yeah, just to give you a little bit of an idea why people use that Fibonacci. It's not just always to figure out how much you expect it to retrace, but you can also use it in the opposite sense. So you can always measure a top, and let's say that hypothetically this was going to be the bottom right there. Like, where would you expect the price to jump back up? Well, we could see it come up and hit any one of these levels up in here, or maybe we're going to only come back to this range, the 0.382. And usually when you hear people say, hey, we got a good bounce out the 382, in the bullish, in the other sense, it's usually a pretty good bullish indicator. Let's just say we draw it right here and we say we have the price go up to the top, and then we'll just draw it. Sorry, it's so small, but we have the price go up to the top right there, a full 100% of it. The retracement A, B, I kind of ruined my point because I drew it already too far down. But okay, let's just say we do A, B. We have a little bit shorter, and we bounce off here. Sorry, I didn't clearly depict that wave, and we continue another 1, 2, 3, 4, 5 up. That's considered pretty bullish if we have a bounce off the 38% range, versus something like the 61.8 to the 60 something is what they call the golden ratio. And that's just kind of like a little pocket that if you can get an entry into it, it's typically a pretty good investment. So it's not on here, but it's between the 1.618 and they'll type it in here too. So why don't we just look that up, because this is about learning. The golden pouch, it says. Maybe that's... Of course, it's going to be just horrendous to look at. I mean, sorry about this. I mean, now I'm sounding like I'm a liar. But it's somewhat of a range like this. It's a small little range. Here we go. We got this, the 0.618 and the 65%. That's what they're saying. So right here, he drew it from the top, moved it to the bottom, and expected a bounce back into this range right here. And I think this is actually gold. This is actually gold itself, yeah. So instead of measuring it, let's say from the top and seeing what they got of retracement to back to the bottom, how much of this was back down, they used it in the opposite sense and said, hey, we're going to measure this move right here and how much is it going to bounce back. So that's using just numbers and math in general to say that, hey, numbers usually follow a rule. So here, that's when if you see me pull this up, that's what you can think. How much percentage of the measured move are we expecting to lose? So in that sense, that's where sometimes it can make a pretty good estimation. So let's just play around this for one moment and say, well, what about this move here down to this bottom one? Where did it reach? Well, what are these numbers? The 23, the 38, the 50. We reached that 0.618 right there, and we went and touched up that 78.6 range. So here, this move might not have been, well, it would have been not to be expected, just because never expect, 40x or whatever. But you can see that mathematically it makes sense, actually. You can see why people use them. They're just another tool that sometimes can give you a little bit of an edge, but sometimes it doesn't really have much meaning. And in here, yeah, I don't know if I have too much more I can really say with Royal Gold. It looks like we're having a little bit of a downtrend right now in the monthly sense, so I might just wait a little bit before I enter into this. It looks like right here it's kind of a clear sell signal, but especially coupled with those earning reports saying that they should be going down the next 3 years. When you look at months, I mean, 3 years isn't that long, so you could say we're at an all-time high right now. You could easily see this kind of transpire, something like this, So are we going to have another one of those kind of things? And that's a possibility. On here, yeah, we're still kind of moving to the downside as well, and there's room to go down. On a weekly sense, we're already down, right? We've already had a pretty good move downward, but it's not that it can't stay down for a while. Right here, it's looking like, oh, maybe there's going to be a few good weeks here, because there's always ups and downs, right? Because we understand it's waves, right? 1, 2, 3, 4, 5, 1, 2, 3 is typically what happens in a general bull market, and it's the opposite in a bear market. And when we get more flat movement, those rules don't necessarily apply. So when I'm talking, let's say Elliott wave theory, like this is only true in a bull market. So you can't use this on every chart because shit, charts move sideways, and you can't you can't make these work all the time. So when they look clear and concise, you can see it, and when they don't, I mean, you can't see it, right? So that's where you can't use Elliott wave theory for everything, but just like everything, the more exposure to the different tools, the more resources you have to make better decisions. I mean, and you'll find out which ones serve more on different charts, but sometimes different indicators work better for different charts. So here with Royal Gold Incorporated, I mean, it looks like there's some good pumps when it does pump. Like right here, it had that big pump up, and looks like we've lost most of that, but we're kind of in this general area. So I think, yeah, overall, Royal Gold Incorporated is a little bit different than your typical just gold or silver asset, in the sense that, yeah, it basically gets interest off of it. So I imagine if gold does good in the near future, I imagine that I don't see how this couldn't, because they're going to be getting paid in gold for a specific price. And if gold is going up, that means that their profits are going to be exponential too. So in that sense, I mean, there's a little bit of overall global market rationale, but you never know with everything in shutdown too, right? So this revenue is tied to mining itself. So if mining companies potentially have crappy years during all this lockdown, which is mining an essential resource, do they have to keep mining gold during a pandemic? Definitely a question. I mean, so there's a little bit more risk in my opinion, but there might be a little bit more reward too with this kind of thing. And looking at what is the actual difference is that this is actually dealing with lending to gold mining companies. So it's not gold mining, it's not owning gold, it's the lenders to gold mining. And I think that there's some other aspects too, because I didn't really get into, let's say, the royalties, right? The acquisition of royalties. So they're basically trying to get equity into these companies too, probably, right? I mean, they probably want to own some of the companies that they're lending to. I'm sure anything's on the table for negotiation, but they're paying out their dividend tomorrow, so I imagine that's accounting for a little bit of the pump that we've seen already today. So it's up 4.5% right now, and you could say that, yeah, on a daily sense, it's still moving up. So how much is that going to keep going? I don't know, but that's where everything matters in the time frame that you're looking at it. So in a monthly sense, this could potentially move down a little bit. In the weekly sense, it hasn't necessarily. It's starting to look like it's starting to come to the upside, maybe. I mean, 1, 2, 3 green bars here, so a little bit of positivity there. But overall, I mean, looking at that income report, I'm not sure if that has any real weight to it. I don't usually look at that, and maybe that's where, well, that's just tying in all the relevant factors, right? Looking at the technicals tied with the macro global economic status. I mean, what's the trend with this kind of company asset? Is this something that's going to do well in the incoming future? I mean, I'll let you be the judge, right? I mean, do you want to own gold? Do you want to own gold mining stock, or do you want to own the lenders to gold mining stock? You can see this is a little bit down the beaten chain, but it's an old company. It's here from the 80s. It had some crazy price action in its early conception, and it had a huge astronomical pump afterwards that made a lot of people rich. So now, like, we are in the all-time high, not really territory here. We're still a considerable amount off of it. We're around the trend line here, where it's pretty much close to fair value in that sense, that over the last 200 weeks. So yeah, I'll let you guys be the judge of this one here. I mean, this might be a nice little diversification into your gold portfolio, as it's seeing to make decent ticks up and down, but it's not very positive when you look at the company and they're projecting a negative return of investment for the next 3 years. But I don't know if that's tied to this, like, gold mining in general, if they're expecting a little bit of a downturn with that, or because you'd think that, with the inflation to come, gold itself will be more valuable and these companies might make a freaking killing, right? Especially if they're getting gold for $450 an ounce and gold's worth 4 or 5,000. I mean, just imagine how much money they're going to be making. And I don't see how they're going to have negative reports, but is that trajectory still, years to come? Are we going to just have, how bad is this, recession going to be, or depression potentially? So I'm not sure if they're making those forecasts for that type of thing in mind, but yeah, I'll let you guys be the judge with this one. I'm not completely sure about what to think, but I was happy to look at it. I mean, I learned some things looking at it. So also with Wheaton, we can Wheaton Precious Metals. I freaking lost it. Anyway, I wanted to look at the summary there because it said it was streaming too. So that's interesting to look at that this is actually involved in that streaming. So maybe this isn't completely all mining in itself either. So take a look at that, guys. I'm just going to exit out of some of this stuff. Yeah, get out of here. We're out of here. I just kind of realized too that, this toilet paper token, it is April Fool's, so maybe I did get fooled a little bit. We believe the solid use cases of the new toilet paper token will prevent volatile dumps. Click to get your play on. And looking at this, I mean, it has this all like fake white paper. I mean, April Fool's, man, it's good. I mean, it's I thought they got hacked or something, but I think this is an internal thing, so I applaud it. I mean, I guess in this state, you just don't even, especially in the cryptocurrency market, it's just like, yeah, your favorite coin is dead. Like, it's not April Fool. It's just reality. So you almost just become pessimistic when you see something like that. And you're just like, oh shit, another scam got in there. But it is kind of funny, I mean, they put in a decent amount of work. One toilet paper equals $1.64. Oh yeah, corn census algorithm. Oh, it's gonna be tokenized. Mary Ploppins is the founder. We got Peter Pioppi. He's got his mask. Oh, the engineer. Oh yeah, man. And the comments are pretty funny. How do I buy this shit? I want it. So yeah, this is a good April Fool's. It was a little bit a little bit of comedy in times of uncertainty. Also here, I mean, I don't know if this has any worth, but apparently we're raising carbon tax by 50%. I mean, who knows if there's any, truth to that, but anyway, hopefully everyone learned a little bit of something here. I'm going to call this a day for my chart analysis, and wishing you all the best until tomorrow. Okay, talk to you later.